Cool. What's up, everyone?
You're live.
We are live, it sounds like. Happy Monday, everyone. Hope you all had a great weekend. Welcome back. It is July 20th, 2020, 7/20/2020. Uh, the stock market was relatively kind of quiet today. The S&P 500 closed up about 80 basis points. We are at 3251 on the S&P 500 and 10,770-ish on the NASDAQ. The NASDAQ was up. If you remember from last week, the NASDAQ underperformed the other two indices. So I think this is kind of a rebound back for the NASDAQ. And now for the S&P 500 and the NASDAQ, we are back to making post-COVID highs in the stock market. So that is something we are now advancing closer and closer to all-time highs in the stock market. Now, for some of you that this is your first live show of mine and you're just tuning in or just want to know kind of my view on that, I think there's a few different factors. And again, I'm not a macroeconomist, and that's like really not my like area of expertise. But they're right. Everyone knows money printer go burr. Jerome Powell is out there printing stimulus checks. We have over $400 billion being given out by the government for income support. So that's the $1,200 a month or $1,200 stimulus check plus I believe it's like $600 of addition to unemployment and just like those types of programs. So yeah, lots more dollars being supplied in the market. A lot of those dollars finding their way into financial assets. Rates are super low. So when rates are low, asset prices are higher. So that's like another thing. Another factor is the fact that the S&P 500 is a market cap weighted index, and so is the NASDAQ, which to me rightly should be. If we look back over the last 100 years, then I think what happens there is the biggest companies as of 2020 generally are like the software companies. And if they're not the software companies, they're the companies that have plenty of access to capital. They can go to the capital markets with a zero interest rate environment and issue a ton of bonds to get them through COVID, even if there's someone like Disney, right? Disney is hurting. A substantial minority of their business, I believe, is theme park related. And so, they may be struggling, but they have plenty of liquidity. And even the big S&P 500 companies that move the index that aren't, that don't have the liquidity now, the government is now supporting corporate credit, right? So they are buying all these assets and supporting it, and which even more allows these big issuers to issue debt at super low prices, even if their business model and their cash flow doesn't support it. So all that to say is we almost don't know, right? After spending the last 3 months together as a community, building our community even better and better every single day, I have now kind of observed that some things are just grossly like too rich or too expensive for me, and some things are great companies, great trends at a reasonable price, and then a lot of the like deep value stocks are just getting thrown by the wayside. Now, time will tell if the value stocks can catch up over time, or are we in a new normal like we have been in the past decade for the forward decade, where value will continue to underperform? I'm really not sure. I have to do a little bit more thinking about it. I have to go to the top of my mountain and meditate a bit. So I do know that I do believe in, like, we're investors here. Some of you who are new kind of wondering whether day trading is whatever. And again, like, I don't mean to go deeply into it, but I will say, right, day trading only works if there's high volatility, right? So if a stock moves half a basis point a day and doesn't really move around a lot, which it's kind of has been the case since we got out of the last recession, like day trading generally just doesn't work, even, right? Because when you trade, like, you're profiting on moves of the stock intraday. And so let's say you can reliably trade and day trade and predict short intraday movements or even swing trade short intra-week movements, it really is only profitable and there's only juice worth the squeeze if the market is super volatile, which it is now, right? The market is a discounting mechanism to discount the future cash flows of corporate profits that are listed. And there's some other factors there, but that's generally what it's there for. And since COVID is very uncertain, there's a lot of kind of uncertainty in the market, and little news comes out and it'll move, and stimulus will come out and it'll move the market quite a bit. So there's high volatility now. If you don't have that volatility, which we won't after we're out of this recession, then like day trading sucks. So that's just kind of like another reason I've already poured it on to day trading. And even if it is profitable, a lot of us aren't here to make a career out of it, because I'm just explaining some of those reasons. The whole point of this channel, the whole point of our community is to build a community of very intelligently thinking. Again, no one can predict the future, but taking all the probabilities that we can see now, understanding business models today, and finding really great companies with defensible positions and great trends. So once we invest behind those trends, you can almost buy it at a fair price or undervalued or whatever, but buy a great company at a fair price and set it and forget it. Like, the whole point of this whole exercise of investing is to make your money work for you, right? So just answering some of that question, just let's make our money work for us and find great companies at fair prices and dollar cost average into them and hold for the long term. Because, right, and then a lot of people ask me about, oh, you like this one versus this one. This one moved up this day, this one moved down this day, and a lot of them are small market cap SPACs or highly volatile SPACs. Some of them are like Robinhood-y types of companies. Look, if you believe in the trend, then you should believe in the trend over a 5 to 10 year term. So an interesting little piece of tidbit that comes out, that came out today was, I saw a investment banking research report about Nikola Corp having a target price at $54 a share. You all know that I don't like, and then they are doing mental gymnastics in this research report. It's like a 3-page report to try to justify why Nikola, who hasn't ever delivered one piece of sellable product, they are doing mental gymnastics to try to justify a $54 a share price. A lot of you weren't there. Very early on, I went live. I'm reading the comments, they're hilarious. A lot of you, like, I don't even know what I was saying. I was early on going live, right? Thank you, Benza. Thank you so much. A lot of you went live. Like, when I was going live, I was explaining how equity research analysts, they do know their stuff. And I would say the majority of the time they do really good research, but their valuations and price targets, if you look at it in retrospect, are always, they're not paid to tell you the truth or to go out, stick their neck out if they believe in the truth, right? They believe they're there to provide a benefit for their customers, right? As just like letting like people like me get up to speed really, really quick. And basically if they're wrong really badly, then they can get fired. And also they rely on access to management. And obviously they're going to piss off management if they think that something's grossly overvalued, right? So all that to say, rolling it back to this Nikola report, it's clearly biased. I'm not really sure if this bank was on the deal or not. If so, it's even more biased. And they probably broker dealer for the deal, right? They're probably getting a lot of fees, transaction fees through it. But they're basically, this is their rationale. I need to find the right spot. Okay. We hold rating at a $54 price target. It's $48, I think. Right? Hold on. Nikola. Oh, it's 38 today. Okay. So you all know I've been banging the table on it's overvalued since like $90 a share. So it's 38. Okay. So they said hold at the time is $48. We have a $54 a share price target on Nikola based on a 7 times enterprise value to sales multiple applied to the 2025 revenue of Nikola, discounted back at the same multiples that Tesla, Neo, and CATL have. That's a lot of beliefs I have to believe, let alone the fact that can you actually crack this market in order to find that growth, right? Like, come on, right? Or there are other companies, like, first of all, I don't know if I believe in the trend. If you want to go really deep, go to my YouTube channel, and I did a 2-hour, 1.5 hour interview with an expert on the trucking industry. Look, maybe they can, maybe they can't, right? It's kind of one of those things, up to them. But I don't really know if I believe like super strongly that they're going to like keep growing or whatever, or even go to market with $1, right? There's that. But even if they do succeed, what if they get delayed? And I have to wait 5 years to see just a little bit of revenue. So why would I buy a company like that or a company like Tesla? You all know I am like the biggest Tesla fan. I'm in the market for my next Tesla, and I owned a Tesla Model X for 3.5 years. And, some of my early passwords were Elon Musk. Like, I've followed this company for a long. Nia's laughing.
Sorry, that was funny.
Yeah, I mean, like, it was my like security question for at one point, like 7 years ago. Like,
who's your childhood hero? You're like,
yes, you guessed it. Who's my childhood hero? At one point was Elon Musk. And so, yeah, I mean, I've read his biography. Like, I love the guy, but like, am I buying Tesla at? Hold on. Am I buying Tesla at 8 to 11 times forward sales? Let's call it 8.2 times forward sales. Well, first of all, I would rather buy Tesla at 8.2 times forward sales than Nikola for 7 times 2025 sales, right? I mean, wouldn't you? Wouldn't you rather buy the same multiple and not wait as long of an established company that clearly has a great market and great growth with clearly a leader that actually can effectuate change? I think so. So everything in this world isn't binary, right? People tell me, they come to me and ask, and they tell me on both sides of it. It's like, Justin, you called it. Thank you so much. Like, this was a good buy, right? And I kind of like, I don't acknowledge it too much because it's like, I haven't compared how that's done in that investor's time frame compared to something else that I've talked about, right? Or I've looked at, right? Or if you had just bought the S&P 500. On the opposite end, it's like, well, you're not right in this like 4-week time frame. I mean, let's just ignore that. So, if I've talked about how I think that Fisker, if you want to watch the full Fisker video, go to my YouTube channel. And again, ROIC members have had it for a long time before that, for like a week before that. Like, Fisker seems reasonable buy-in if you believe in the trend. All these little like pre-revenue ones are, first of all, speculative, and you should never allocate a lot. Like, I would not, all opinions, not advice, I would not allocate a ton to those speculative plays. But when I get asked about cloud computing, hey, from Vegas, is everything okay? ShopTard is from Vegas. I have a trip planned that's probably getting canceled to Vegas. And for those of you, I'll get to that. For those of you asking about the finance internship, we're still going through resumes. It takes some time, so please give us a little bit of time. I will respond to everyone. Yep, cool. So when talking about big growth companies, right? I've heard about Fastly, Cloudflare, ticker NET, Datadog, that are trading at like, they are growing at 30 to 40% top line. Yes, they are great cloud businesses with high EBITDA, like cash flow conversion rate and all that stuff. Like, it's a great business and sticky, but you're buying 30% growth for 30 to 40% software growth for 35 to 50 times next year's sales, when I can buy 18 high teens top line software growth from Facebook for 6.5 times forward sales at a fraction of the cost. I think everything, when you think about things, you really have to think about, like, is there a wrong and right answer? A lot of times, like in life, like we all are still surviving, right? Like we're all living, we're all here online, like enjoying ourselves. Is any decision that we make right or wrong? Like, the vast majority of decisions that we make in life aren't necessarily right or wrong. They're just not optimal. So what are we trying to do? We're trying to optimize a portfolio that works for us in our sleep over multiple years, finding the next Google, Amazon, Facebook. Facebook still might have legs. A lot of these still might have a lot of legs. We're trying to find that going forward. And we all live our day jobs, like daily lives, like enjoy our weekends, not having to worry about, do I have to make a bunch of money on Monday trading the stock market, right? And also, so I would that's that. Let your money work for you in your sleep. That's the whole point, right? And secondly, I do love real estate. That is another way to kind of make your money work for you in your sleep. But on the private side, I believe the best values to buy into real estate is definitely private real estate, because it's very inefficient, versus public real estate is public REITs. That's all bid up to fair value. So you're really only getting that like cash flow yield, like a very efficient cash flow yield. So yeah, I would just say, just make your money work for you. We're all like, think about ROI, not only on your dollars, but on your time too, right? Because a lot of us here have day jobs. Like we have a very highly educated crew here. And a lot of people here have really high paying jobs too. So, welcome. A couple announcements. You all see if you're on TikTok, go to YouTube. You all know where to go to enter today's raffle. We have Nia on the show as per usual.
Do we have echo? I feel like we don't have echo.
We don't have echo. I think she solved the echo. Someone say.
You guys tell me, but I feel pretty good about it. But yeah, I'm here. Hi. What's up? Also, the comments are out of control tonight. But
yeah, lots of comments today. Another announcement here is I have a really good friend of mine who is, very experienced in the hedge fund industry here. He cannot be out here in the conversation, but maybe I can talk to him. Let's call him Hedge Fund Henry. So maybe just if you have a question for Hedge Fund Henry, maybe I can ask him for you. Another sad, bittersweet piece of announcement is, unfortunately, I'm going to be not continuing the Monday live streams, and because Mondays, I have noticed Mondays have been really, really tough for me. As you all know, everyone fears Mondays. I come to my inbox, even though I'm checking my inbox all weekend. I come back and it's an absolute nightmare. And then getting ready for the live, it's just really hard, and I'm scatterbrained. It's Mondays, I haven't even had a chance to really read the news too much. But in kind of to compensate for that, I'm going to be increasing the time of the Thursday lives to an hour and a half to give us some more time to breathe and talk and get the questions done. And also increase the raffles to $30, two $30 raffles until I have a full sponsor. Not so far off. Couple interesting opportunities, but I don't want to jinx us as a community to support the content and increase our raffles. But stay tuned. So yeah, and in terms of it's just like one time a week will allow me to really actually like get deeper content done for ROIC and for the YouTube channel and TikTok channel, because as you know, I spend hours on every time I look at a stock, and this is just kind of like, spitballing. So, like hopefully it's okay. And again, like if we can grow the community together, like tell other people like who might be interested, over time, maybe I can dedicate more time in some beautiful future to spend more time with you guys and bring back that Monday show. But yeah, elongated, extended Thursday live starting at 8:30 Eastern going forward. And again, this is all iterative. We'll change it as a community. So yeah, more YouTube videos, more formal YouTube videos, more write-ups on ROIC, that's what that time is supposed to buy me. So hopefully you're okay with that. I actually feel pretty good this Monday, but last Monday I was like, you can go back and watch that video. I was like, oh man, I was dragging. Okay, cool. So welcome back. Welcome back. Love seeing some familiar names. If you're on TikTok and you want to enter my raffles, please go to search a couple cents on my YouTube channel. Go to my YouTube channel. There's a raffle copter link, and you just enter there. And we pick 2 winners. Thank you, Southern boys. Appreciate it. Always good to see you. 2 winners every single time. We're going a long update today. So I just wanted to say, I want some comments. What do you guys think about this whole ByteDance TikTok ban? I have some pieces of data for you, right? So ByteDance's advertising revenue is expected to rise 60% this year. Crazy growth for such a big company. So to as much as $27 billion in advertising revenue. That's insane. That's crazy, isn't it? So just for reference, if I'm looking at this correctly, Facebook has $70 billion in revenue. Thank you, Southern boys. I appreciate it. So TikTok is supposedly like more than a third of the size of Facebook already. Isn't that crazy? I think that's crazy. What do you think, Hedge Fund Henry?
I think that's crazy.
He thinks it's crazy as well. He thinks it's crazy. For that valuation, right? For that valuation, 60% top line growth. Their last capital raise came out valuing them for more than $120 billion. And Facebook is worth $700 billion. Okay, reasonable. But if they get banned in the States, we just saw they got banned in India, that is expected to reduce their value by 30%. So very binary. I hope, having TikTok being kind of like having a special place in my heart, I very much hope that they take that company public and change the corporate ownership so that it's more of an international ownership and China doesn't have the power to look at user data. That's the problem, right? And again, they lose creators. I guess I am a creator. I'm definitely not a top creator. I'm no Charlie. So Charlie D'Amelio.
Oh, okay. Copy.
I'm no Charlie D'Amelio or Addison Rae. No? Come on, Nia. Don't give me some credit.
Like, the world will never know because they've not seen you dance in this basement the way that I have.
Oh, I mean, who's better, me or Addison Rae?
It's a close call.
Oh, yeah,
It's
okay,
a
cool.
close
Yeah.
tie. A big tie.
You know,
right there.
30-year-old Asian man, versus.
Like a 16-year-old girl. Yeah, I get it.
Okay, cool. Anyway, if they do go, guys, if you're on TikTok, if TikTok does go away, please follow me on Instagram. That's where my short form videos will live. Apparently Instagram is trying out Instagram Reels, and that'll be like their TikTok kind of TikTok competitor. And so regardless, if they can at least do an okay job with an algorithm and I can create similar content, hopefully I can, my Instagram and everywhere, I am a couple cents. So please follow me there, follow my YouTube channel. And if you're really interested, we have a free newsletter. It's called Morning Sense. Sign up for there. So I go find, so there's a link in my description on my profile. So just go find out more in there. Thank you so much. Cool. So, and for those of you asking me about, I could be the next Charlie if I play jazz on TikTok. I don't know if I can still play the trumpet. It's been like it's been like a decade. It's been a long time since I've even touched it. Other than last week when it almost fell on me.
That was funny though. And I see that you didn't put it back up.
I didn't because I feel like I'm going to die.
Yeah, fair enough.
Okay, so we have a lot of weekend